Welcome everyone, I'm Greg Schnell, the Canadian technician here to host the Market Buzz. This show looks at weekly setups across the US market. Using the tools available on StockCharts, we'll look for long time frame trades. Please subscribe to my articles, Twitter feed, and gregschnell.com. Thanks for taking the time to join me. We have lots to cover off today. The market had a big surge off the bottom, or not off the bottom, but off the back of the jobs number this morning coming in at over 200,000. So that was a nice positive push. And as we mentioned earlier, in an article earlier in the week, my short-term indicators had flipped to bearish, and my medium or longer term ones, which I think are more valid, were still very bullish. They were up around 70%. So we had a little bit of a blip down, and it looks to me like we're going to try and break out to new highs here. I'll cover off a few of those things in today's show. So as we get into the agenda, I do want to talk about, the jobs numbers continue to improve a lot in the US, so that's great. In Canada, we had the worst jobs numbers since 2009, so that's a bit of a hit. Checking out the Dow, I want to go through the Dow 30 stocks. I think there's something pretty important in there just to check out, and I'll say it's ballasted with some real positive chart setups, and then there's some charts that are just really surprisingly weak. Oil and OPEC. So OPEC met yesterday, and they basically agreed to take 500,000 barrels off the market. I think the price of crude responded positively to that this morning, and then has pulled back to pretty much, it's up slightly since yesterday, but not a whole bunch. And there's a new feature on StockCharts I want to show you, so by the time we get through all of that, we'll probably suck up all the time we've got. But I want to cover off, if we get a chance, we'll jump into some of the oil names and some reasons to be more optimistic. I know I mentioned it lately, but oil at $58 and these stocks priced so low, it seems to me like there's a big opportunity there. Okay, so first of all, here's the intraday view on the NASDAQ and the S&P 500. So the S&P performing a little bit better than the NASDAQ, but the one thing we're approaching here is this 3150 top that we put in just last week. So a 1 week pullback, not a big deal. Anyway, here we are on the NASDAQ working our way back up towards that high as well. For the S&P 500, what we can see here is big uptrend, and we had this pullback, and now reverting back up, and the same thing on the NASDAQ. Not a huge issue here. I think what we want to watch for now, and that just looking, not being any more scientific than this, just what you see is, when your momentum indicators start to roll over and roll over and roll over and now rolling over, what we want to watch for here, does it stay at a high level and just kind of oscillate along, or does it start to break down lower? So now we'll have negative divergence, right? We'll have, if price can go and hit a new high here or a new high on the S&P, what we'll have is a lower high on the indicator and a higher high on the price. And so it's that divergence that makes us want to be just paying attention. And so if you're looking for a multi-week pullback, that's probably one of the best places to find it. Okay, so here's the weekly view, and what we see here is we're still in a big uptrend. Everything's in the top right-hand corner. PPO is at a nice high level, up around 2%, and just oscillating sideways. Nothing wrong with that. That's all just bullish. All of these little waves in here at 5 and 10% are a lot harder to live through than they look. But in general, the market's been trying to go higher. And if we look at the point and figure chart, that makes it quite clear we're way up in the top right-hand corner, and even a pullback would still say we're in good shape. So that's nice. Okay, let's go over to the Dow stocks. And what I want to cover off, a couple of things I want to cover off here, is a new tool on StockCharts, and this is to send out a daily report. So if you click this box, you can name it or whatever, but what you want to do is you can have it whenever the market closes, you can have it send out. And so if it was a day where the Canadian market was closed, you might want that to be different. sorry, if the Canadian market was open but the US market was closed, you still want your report. So anyway, this would allow you to do that. But what I like about it is you can option it to a day or a week. So one of the things that's nice is getting a weekly recap, and this should be a great opportunity for that. This feature turned on yesterday. I saw it this morning and my eyes lit up. It was great because I have a lot of alerts that go off every day. And tell me what I want to see. But more importantly is this option for a weekly report instead of a daily. So that's a beautiful thing. Okay, we're going to jump into the charts here just to show you. Let's just update this. So we have 3M as one of the better performers today, up 4%, and Dow DuPont up 3%. What's interesting about those two charts is they're both below their 200-day moving average. So that would be nice to see a turnaround in some of those names. And looking at the other end here, we've got the healthcare stocks. United Health at the bottom and Walgreens in here. Merck is down near the bottom as well. But Merck is looking like it's ready to break out. I'll probably do a DITC article on that. Don't ignore this chart article on that later today. And Walmart, middle of the pack, I'd say, doing okay. Pfizer trying to make some moves here. Johnson & Johnson still looks okay. But as we go through these charts, one of the things that's amazing is 11 out of the Dow 30 stocks are below their 200-day moving average. I find that so surprising, and not just below their 200-day, like well below their 200-day moving average. So that's a bit of an issue. So here we see 3M, and we can see it's grinding along pretty much at a support and resistance layer. If you wanted to say 180 or 170 in here, you could just see that we're having trouble. That was support, now it's resistance, and the 200-day is sitting in this level here. So we'll continue to watch and just see if it can get going. I want to set this to view all. We can go ahead and look at it on a weekly chart basis. I'm just going to do the daily today, and the idea is to understand the difference in some of these charts. Like, I would think, with the run we've had, a lot of them not necessarily following Apple, but they'd all be kind of just breaking out to new highs or whatever. And as I go through the chart, some of them are, but look at how far behind American Express is here. It's almost $10 behind its prior high earlier in the year, whereas JP Morgan, of course, is up and to the right and up about $20 off its prior highs. Here's Boeing, and this is another one. So this stock was treading water around the 200-day moving average, but has jumped back up. Here's Boeing, and we can see sideways 200-day moving average and the chart jogging sideways. I don't think any of us expect Boeing to suffer long term, but eventually they'll get this plane thing figured out and get going. Caterpillar, this chart looks okay. The one thing I would say is it looks a little bit like it's trying to set up this double top here where it's trying to get through the prior highs. And even though the S&P topped last week, the early November was when Caterpillar topped. So we want to start watching why these stocks aren't following along. Here's Cisco, and we can only say that this is quite messy. This chart just continues to dive into the bottom right-hand corner, and even on a big up day, the best thing I can do is trade into inside range of yesterday. Chevron, again, coming off the back of the OPEC meeting, this chart is straight sideways. But what I'd like to say here, it was below its 200-day this morning, moving above it this afternoon, yesterday, moving above it today. Let's just say it's wandering around the 200-day. But it would only take $5 to get this thing up to new all-time highs and blow out the top. And again, OPEC at $58, with OPEC finished and oil at $58, this setup looks really, really strong to me. So I'm much more encouraged to see this Chevron setup. Now here's Disney, and again, it's not enjoying the upthrust today, which I'm quite surprised at because I'm very bullish on the stock here. I think they have lots of upside potential going on, but you can see the scooter ranking is rolling over and pulling back under the 75 line. So what that is, I have overlaid two indicators here. So this pink area or purple area is the relative strength compared to the S&P 500, and the scooter ranking line is on this right-hand scale. But what you'll see about it is I've drawn a line in here at 75, and when Disney stays above 75, that's a very bullish place. I am surprised to see that first of all, it's below 75, and I'm also surprised that it's not getting more support today. So that stock concerns me a little bit that it's not getting the love I would have expected right here, right now. This Dow DuPont chart, again, I pointed it out at the beginning. So 3M was below its 200-day, and so was Dow DuPont, but they were the best performers of the day. Dow is trying to bounce off, or DuPont is trying to bounce off its lows here, and it made a lower low yesterday and is now trying to come out of this. But you can see the downtrend in the 200-day is pretty clear. And Goldman Sachs Group trying to get back through these prior highs here. Whoops, nothing wrong with that. Nice looking chart and a good surge here today. So nice to see that one finally perk up. Home Depot has pulled back to its 200-day. Great company, all that kind of good stuff. Everything's working well here. I am surprised to see its scooter ranking down around 30. So compared to its peers, it's one of the worst quality charts out there. But literally, I think this was after this gap down last week, it's been struggling. I would expect it to find support here at the 200. Looking at IBM, another one below its 200-day moving average, scooter ranking down here around 30, and just not really a whole lot of mo, but I don't think we want to see this 125 level break. That's probably giving it a lot of room, maybe even the 127.50, but still, we're right around horizontal support here for IBM, so it'll be interesting to watch and see how that holds up. Intel Corp, double topping so far, so we want to watch and make sure it can get back through that. I will say the uptrend in the PPO has ended here, coming off the May lows, so that's a bit of a concern. Now it can bounce here around zero, that's fine. Again, on a daily chart, pretty whippy stuff. Johnson & Johnson got this triple top going so far. Again, a nice push through that would make this chart really shine. Scooter ranking right around 50. It seems to top out there lately, so we'll watch and see if it's got more positive resolve. JP Morgan, this chart's just beautiful. I think for everybody who was on board here, this thing was flagged at around 115 for a breakout, and here we are up at 135 and running, so really nice. Coca-Cola, a defensive name, holding up really well considering the market has kind of rotated into growth. I will say the scooter ranking has been weakening, and now it's rolling over right here around the 50 level, and as you're trying to test prior highs, so this is a pretty cautionary setup for Coca-Cola. McDonald's Corp below its 200-day moving average, trying to turn higher. This will be an important place to watch for resistance right around the $200 level. If this starts to fail at 200 or 205 and roll back over, we can see its PPO is below zero. In this case, I've got MACD. But if it rolls over below zero, that's kind of a bearish sign. So be cautious on McDonald's here. 3M, this again, one of the top performing charts on the table. We want to just see how this is going to behave coming out of here, and again, it needs to kind of get some growth going. I would like to see this scooter ranking, so it pushed up, pulled back, and now if it starts to move back above 30 onto 50 here, I'd be much more excited about it. But again, it hasn't been a top performing stock for a year and a half, so let's not get too hopeful. Here's Merck, and Merck, if we put a number on it at 86 or 87, the stock is pushing up to new 52-week highs today. You can see the scooter ranking never gets it above 75, so it hasn't been a top performer for a long time. But I think if we can start to break out of here, healthcare has been a big performer lately, so this one might be able to push higher. Microsoft, just a beautiful chart up and to the top left. Again, a little bit of negative divergence here. It's still having a beautiful day on a big up day in the overall market, so that looks good. Let me just click on this chart here, because there's one thing I want to show everybody. When we look, see how smooth the progression of Microsoft outperforming the S&P 500 is here? I like this. This is just textbook beautiful. I will say this, that the PPO is putting in a lower wave here, and so if this relative strength line started to break, that would add more caution to me for the overall market, just because Microsoft's been such a leader. Again, it's still very bullish, and I'm just saying the whole chart is set up bullish. What would change my perspective on it is the scooter ranking starting to fall below 75, this PPO making a lower high. It's still above 4. That's huge. If it's above 2, usually it's going to come down, bounce, and make another higher high. We didn't see that in September, so the fact that we've had a push, a wave down, and now where this wave ends. That's more cautionary to me. So it's not a problem yet. I just throw that out. The run has been almost a year long here, so we want to be focused on protecting profits if they're going to start to break down. Nike got an upgrade yesterday and has taken off. It's 96.62. Looks like it's going to pop through that $100 level. Okay, Pfizer, this is another healthcare, and what we see here is below its 200-day moving average. Can it finally kick up? Another horizontal support and resistance layer, call it 39 bucks, just for, there's a dip here and a dip here below that, but a couple other stops around 39. So kind of an important level right where the 200-day moving average is. We'd like to see that cross and break out. Procter & Gamble, that looks like an uptrend to me, and horizontal support and resistance, or horizontal resistance layer around 125 bucks. Chart still looks good, but look at the scooter ranking starting to weaken. So it was really strong, and getting weaker and weaker and weaker. I'd be cautious if this rolls over here. The Travelers, you can see, again, this was a good example. So scooter ranking is trying to improve all through here. Starts to break down in here, no big deal, but it's having trouble getting back up into top performer. And now it's fallen apart relative to its peers. So again, the SCTR is like a sports ranking compared to its peers. Comparing a stock to its peers. In this case, they're all large caps. But what we're looking for is the stock, when it's outperforming, it should be in the top quartile, up above 75%. When it's in the middle, just between 25 and 75, quite frankly, it's a wash. It's not one or the other. It's just performing on average with the large caps. But when it's in the bottom 25%, that's really weak, and obviously this chart is weak. But the real question, or the real important piece of data that we got earlier, was that relative to its peers, it's been declining since the summer. And so that's a real clue to take things off. And I'm noticing something interesting on Twitter, and I've got a really nice friend who doesn't agree with diagonal trend lines, and I have no idea what the hardship is with that. But here is a nice uptrend held on by a diagonal. It breaks. It gives you a clue that the trend it was in might be changing to a sideways trend. That's fine. Then you start to see your scooter ranking start to fail, your relative strength in purple compared to the S&P 500. Both of those are decaying, and all of a sudden the chart starts to break down and you wonder what you should do. Well, in this case, okay, call it horizontal support and resistance was the best exit. But your first clue was that the uptrend was broken and your relative strength indicator started to fail. So I think it's a good example of using the uptrend, and a change from an uptrend to a sideways trend was a good clue that you might need to take decisive action on the stock. Okay, United Health, this one is testing a prior high right now. What a bullet move from 210 to 280. Really unbelievable, actually, since October 1st to December 1st, that $70 move, 25%. Remarkable. But you can see the scooter moved above 50 for the first time on the whole chart and accelerated up, and now is in the top quartile. I like it up here. I want to see it stay up here, especially as it tries to double top. So it might consolidate for a little bit, but I do ultimately want to see this thrust through. UTX, this chart is much different than Travelers, where you can see the scooter ranking's been improving lately, and it's trying to get into this 75 level. And again, if it can push back through here, this is a very bullish sign, and we want to watch for that. It did break out through its prior high, came back, tested that line, and now we want to see it continue to rock. It's having a nice day today, up a little bit more than the market, so outperforming is starting to work again. Visa, considering it's so related to, I'll call it consumer or consumer discretionary, we want to see this chart push out to new highs, obviously 185 bucks, seeing it go through there. It's such a good chart. That's what I would expect to happen here. You see it starting to roll over a little bit in momentum, so maybe it's going to pause a bit more. There is an uptrend line. I would put it across here. That line looks to be make the most sense, somewhere around $175 now. If that trend starts to break, I'd watch to see if the scooter ranking starts to break below 50 here. I don't want to see it kind of make new lows. If that was happening, something would be changing for me. While I was on the cruise a couple weeks ago, I did a presentation about 5G, and to the people who are members in my GregSchnell.com site. And one of the things that popped up was that there was about 30% of the 5G stocks doing really well. And one of them was not, they weren't horrible, but they weren't breaking out to new highs, were these telecom stocks. And so one of the things that's interesting here to see this kind of triple top set up here. And now the real question is, can Verizon break through? So we've seen it come down and bounce off the zero level. Now if this was going to start to head higher, this would be lots of room to go. And you're breaking out to higher highs. Again, the whole 5G initiative is sitting there. So keep watching on this. There's big horizontal support at 60, or support and resistance now at 60. So it was resistance, now support. And we want to see this continue to push higher. If the stock can start to break out here, that's a pretty nice entry. And I think they pay a pretty nice dividend we could go see. I just have it set up on a different chart with my, so it yields 4% on the stock. That's pretty nice. And Walgreens Boots, this chart's getting better. And one of the things I want to point out on here is we have a horizontal support and resistance layer around $58. And with this $58 breakout, pushing up and now pulling back and checking it, it's a nice place to just keep watching. And if we can start to turn higher, this is a pretty good thing. You'll see it on a lot of stocks. The scooter will go to not overbought, but up into the strong territory, pull back. And then on its pullback, that's where you really want to watch and see if it gets support and starts to take off and makes a new run to the highs, because CVS is doing quite well, actually, and we aren't seeing the same thing out of Walgreens. One concern I have here is this uptrend in momentum is starting to wane here. So if this bounces down here and starts to take off, that would be very bullish. If it can't get that takeoff right here, right now, then I'd probably let this trend line break and see how it handles when it comes back to the 52 level. But not a bad looking stock. It's just, I like the breakout that it's had here above its 200-day moving average. Scooter getting better, now starting to pull back. I want to see it reemerge and start to push higher. And in just a second, I'll go show you, let's go show you CVS right now. Let me just grab a new one, CVS. And what the point I want to make is, look at how strong this chart has been. And again, we want to see the scooter ranking stay nice and high. This chart looks so good. And it would surprise me that we don't start to see something, management reaction out of Walgreens to try and get their stock moving in the same sort of trajectory. So we'll keep watching and see if they're able to do that. But to me, it still looks pretty bullish. Okay, getting over to, so that was Walgreens up there. Here's Walmart, just a beautiful uptrend. But look at the scooter ranking starting to weaken here and hang out around 50. That would be the lowest level going back to June. Now, Walmart's typically a more defensive stock. It's got high cash flow, so when we're worried about cash flow, people are buying it. And the stock, for the most part, hasn't had a scooter ranking below 50 for over a year and a half. Since this gap up, we had the dip in December with everything else, and then it's been gently climbing higher here from $90 to 125. Really a nice push. So as the stock continues to work higher, I sure wouldn't be selling it here, but we want to see it get back through this 120 level, looking like a bit of a horizontal resistance layer, and see if it can start to do that. The PPO is right down, or MACD right down at 0 and starting to turn higher. Okay, I keep touching the screen there. Sorry about that. And here's ExxonMobil, another stock down below the 200-day moving average. One of the things I want to point out here is that you can see the higher lows on momentum every time here and trying to get back above 0. So here it's pushed above 0, and this would be the first bounce back above 0 right at 0 level. That's much more bullish. So I want to keep watching that. And if this is going to start to break out, that would be a ride. And one of the other oil stocks that we talked about earlier was the Chevron one right up at the front there. Let's just scroll down. So Chevron is more positive than we see for Exxon. But, just going to a weekly chart on this thing, really horizontal resistance here around 125, I would get very excited to see a big base like this when you consider all of the volatility that oil's had and Chevron's held in here. If this can start to turn up while the PPO is right at zero, this is a much more bullish approach, and I would like to watch this one. If I was to pick two oil stocks, I'd be picking Chevron over Exxon, and especially if it can make that $5 move through 125 and start to change the whole chart. That would be extremely bullish. Okay, so we talked about that new trigger or that new feature on StockCharts in here. That was in my PowerPoint at the beginning. We've talked about the Dow 30. We've talked about how the overall stock market's pushing higher, and there's lots going on. The big thing, again, now that we're on this daily chart and we've had this pullback, what we want to watch for is to make sure that on the next move, we start to move up again, and the MACD or the PPO will be negative, like it will be behind the stock price. And so that gives us that divergence. But what happens is your divergence, if we're in a really strong market, the MACD or the PPO will just keep oscillating above zero. And I'm making these waves with my hand. I probably need to do it on the screen. But what you need to see is that this wave continues to oscillate. And on each one of these, there would have been negative divergence, right? Here we're at a lower low. And so we want to see this turn higher. And then in this particular case, we actually had a higher high in price and a lower high here, and then it rolled over. Well, here we're right up around the same level, so we don't have any divergence yet. We have a higher high in price, but we have the same high. That's normal, having the same high, and it just stays sideways in here. So I don't see the blow off high yet. I will say that I do want to watch it on the daily chart just to see if this negative divergence starts to show up and we have to come back down around the zero level, reset, and take off to new highs. So we're still in a very bullish period here. I had Jeff Hirsch on the show the other day, and the big thing Jeff covered off was the Santa Claus rally still about to come towards the end of the month. We had very good retail numbers through Black Friday and Cyber Monday. We have strong consumer sentiment. There's some strong consumer stocks out there. Just everything still seems to have lots of momentum to me. And until I start to see more weakness in my data, the whole market looks bullish. I would continue to lean into the oil stocks here. They are very oversold and are starting to break out. So if I was to just pick two. Here's rig and precision drilling. So both of these are oil service stocks, and they're actually starting to improve. So rig, going back 5 or 6 months, is starting to move. Precision drilling starting to turn up off a big base here. Again, I think the oil stocks look a lot better. Look at these PPOs trying to go above zero for the first time in a while. This is the kind of thing that makes a bottom, and it's a really interesting place to look on these charts. I like the fact that this long downtrend and the PPO is starting to break. Same thing for the 6-month one here on precision drilling. And if we could start to see these oil stocks pick up, that's a surge that I think is more important for us to follow. So as the chart continues to improve, we should see a big move to the upside. I want to pause with the overall oil picture, and I know the stocks are really, really ugly here. If we went with XOP, you can just see that we have literally spent 6 months down here, and even as oil's at $58 can't get a bounce. I like the fact that this downtrend here in momentum is finally cracking. And what do I mean by that? I mean that if I draw this line down here, we're finally starting to make higher lows and higher highs on the momentum wave, even though price is right near its low. This could easily start to perk up, and there's some really bullish information out about the oil stock, so I want to stay involved with that. Thanks for taking the time to join me on Market Buzz. Market Buzz airs live Wednesday and Fridays at 10:30 a.m. Eastern, 7:30 a.m. Pacific on StockCharts TV. Thanks again, everybody. Bye-bye.